All right, if you're here right now, you probably felt it already. Silver didn't just drift higher today, it snapped. And this didn't happen in a vacuum. I'm glad you clicked because what just happened matters, not just for silver, but for how you read markets going forward. A few hours ago, Donald Trump announced a 25% tariff on imports from South Korea, and almost immediately you saw silver react. Fast, sharp, decisive. Now, here's the thing. The real trigger isn't speculation, and it's not retail traders piling in. It's something deeper. Stay with me, because I'm going to show you how to spot these moves before they show up on your chart. If you're holding silver right now, you need to understand what just changed. If you're watching from the sidelines, you need to see why this pattern keeps repeating. And if you're just trying to figure out how markets actually work, this is your education. Your job today is to understand the mechanism, not just the headline. Before I explain why silver moved, let me slow this down and teach you something most people miss. You've probably heard silver described as a precious metal, right? Safe haven, inflation hedge, store of value. But that's only half the story. Silver is also a core industrial input. It's in electronics, solar panels, automobiles, medical equipment, batteries. So, when global trade starts to fracture, silver doesn't just benefit emotionally. It benefits mechanically. Think of it like a bridge that connects fear and function. When stress hits the system, money runs towards safety, but industry still needs supply. Silver sits right in the middle of that collision. That's why it moves differently than gold, and that's why you need to watch it differently. Gold is pure sentiment. Silver is sentiment plus necessity. When both forces activate at the same time, you get what you saw today. Now, if this is starting to make sense, drop a comment below and let me know if you've been tracking silver or if this caught you off guard. I actually want to know where you're at. So, what does that tell us? It tells us that silver isn't just reacting to fear. It's reacting to the breakdown of a system that relies on predictable trade flows. When those flows get disrupted, the price doesn't creep, it reprices. And that repricing happens fast because the market already knows what's coming next. Now here's what's actually happening. Let me break down the sequence, step by step, so you can see how these dominoes fall. First, the tariff announcement. A 25% tariff isn't symbolic, it's punitive. It instantly raises costs across supply chains tied to South Korean exports, especially autos, pharmaceuticals, semiconductors, and advanced manufacturing. We're not talking about small adjustments here. We're talking about cost structures that were built over decades suddenly becoming unsustainable overnight. Second, those higher costs ripple outward. U.S. manufacturers face margin pressure. Importers face delays. Corporations face uncertainty about whether to eat the cost, pass it on, or restructure their entire sourcing strategy. And when uncertainty rises, confidence drops. You can see it in futures pricing. You can see it in credit spreads. You can see it in the way capital starts repositioning. Third, capital starts to move, not slowly, quickly. Investors look for assets that benefit from stress rather than stability. That's where silver comes in. Here's what's wild about this moment. Silver is reacting not because demand might rise someday in the future, but because trade trust just cracked today. When tariffs become leverage instead of negotiation, the entire pricing structure of global trade shifts. Contracts get renegotiated, margins get compressed, supply chains get questioned. So when that trigger hits, here's the cascade. Production costs rise, growth expectations wobble, central banks start leaning dovish because they see the slowdown coming. Currencies get questioned because nobody knows who's going to absorb the hit. And suddenly hard assets with dual utility catch a bid. Silver checks every box. It's a monetary metal. It's an industrial metal. It's portable. It's scarce. And it's sitting in a market that's been underpriced relative to the stress building in the system. That's not opinion. That's structure. But here's the part that should make you pay attention. This move isn't loud yet. It's early. The headlines are still catching up. Retail hasn't piled in. Social media isn't flooded with silver memes. That should make you lean in, not lean back. Because when the move is early and the trigger is structural, that's when the real opportunity exists. Not when everyone's already talking about it. Not when the chart's already parabolic. Right now. When the smart money is repositioning and the narrative hasn't caught up yet. And now, let me show you what most people are missing. This isn't the first time we've seen this exact pattern. Zoom out for a second. Because this isn't new. This is the same playbook you saw during the 2018 to 2019 trade war cycle. Every time tariff escalation replaced cooperation, silver surged ahead of broader commodity inflation. In 2018, when Trump first announced tariffs on China, silver was sitting around $15 an ounce. Within months, as the trade war escalated and uncertainty deepened, silver climbed to the mid-19s. That's a 25% move. And it happened before inflation data even confirmed what the market was pricing in. The move wasn't predicting inflation. It was predicting the breakdown of trade predictability. Same thing during the 1970s trade and currency realignments. When Nixon closed the gold window in 1971 and currencies started floating, silver didn't wait for official inflation numbers. It jumped from around $50 to over $6 in just 3 years. Why? Because the system changed, the rules changed, and when rules change, hard assets reprice before everything else catches up. Same thing during the early 2000s when China joined the WTO and global trade flows restructured. Silver moved from the $4 range to over $20 within a decade, not because of a single headline, but because the structural demand for industrial metals in a globalized economy shifted permanently. When you look at the pattern, silver doesn't wait for confirmation. It sniffs out stress before it shows up in GDP data. It moves when the system shifts, not when the news gets loud. The larger story is this. When trade systems fracture, silver prices don't creep, they reprice. And they reprice violently because the metal sits at the intersection of two forces that both accelerate during uncertainty: monetary flight and industrial necessity. Now, let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this fade? Of course. Markets overshoot, headlines reverse, politicians negotiate. And yes, silver has a reputation for violent pullbacks. That's real. We've seen silver spike 15% in a week and give back 10% in 2 days. It's volatile, it's thin, it's prone to manipulation accusations every time it moves. Could this be another head fake? Maybe. Could tariffs get walked back in a week? Sure. Could this be nothing more than algorithmic front-running of a headline? Possibly. But here's the thing. It doesn't actually matter whether this was driven by algos or institutions or some grand conspiracy. The mechanics are what matter. The fact that a tariff announcement triggered an immediate repricing in a dual-use asset tells you that the market is already pricing fracture risk into the system. Focus on what you can control. Watch the policy. Watch the trade tone. Watch the macro signals that don't lie. Price reacts to structure, not narratives. If the structure supports the move continues. If the structure breaks, the move fades. That's it. That's the game. There are probably 3 types of people watching this right now. Maybe you're already in silver, and you're wondering if you just missed the top. Let me say this. Chasing parabolic candles is dangerous, but ignoring structural shifts is worse. If you're patient and you understand what you're holding, pullbacks become opportunities, not exits. Silver's going to do what it always does. It's going to spike, it's going to pull back, it's going to consolidate, and then it's going to spike again if the fundamentals stay intact. Your job isn't to catch every move. Your job is to stay positioned for the repricing that happens when the system changes. If you're in profit, take some off if it makes you sleep better. But don't abandon the thesis just because the chart got choppy. Maybe you're skeptical and you think this is just another headline spike that'll fade by Friday. That's fair. I respect that. If that's you, don't watch the price. Watch the policy language. If tariffs expand or retaliation follows or trade partners start choosing sides, the thesis strengthens. If Trump walks it back or South Korea negotiates an exemption or the market shrugs it off in 48 hours, then, yeah, this was noise. But don't dismiss it before you see how the policy evolves. The price moved for a reason. Your job is to figure out if that reason persists. Or maybe you're new and you're trying to learn how these patterns work so you don't get blindsided next time. If that's you, this is the lesson. Markets move when systems change, not when emotions spike. Emotions create volatility. System changes create repricing. Learn to identify the system's shift first. Learn to separate headlines from structure. Learn to watch what central banks do, what trade flows do, what supply chains do. That's where the real signal lives, not in the comment section, not in the hype, in the mechanics. So, here's what I want you to answer in the comments. Where are you at right now? Are you holding? Are you watching? Are you learning? Let me know, because I actually read these and it helps me understand what you need next. Now here's where I stand. I'm not blindly bullish, and I'm not fading this move either. I'm watching three things closely. First, I'm watching whether tariff language escalates or spreads to other trade partners. If Trump announces similar measures on the EU or Mexico or other major importers, that's a signal that trade fragmentation is accelerating. If that happens, silver's not done. Second, I'm watching how industrial demand forecasts adjust over the next few weeks. If manufacturers start signaling supply chain delays or margin compression or restructuring costs, that validates the repricing we saw today. If industrial demand holds steady, and this was purely a safe haven reaction, that's a different story. Third, I'm monitoring how silver behaves on pullbacks. Does it find buyers quickly, or does volume vanish? If every dip gets bought within hours, that tells you there's real demand underneath. If it gaps down and nobody shows up, that tells you it was algorithmic froth. Based on my analysis, this tariff move was structural, not emotional. The fundamental picture hasn't broken. It's asserting itself. Silver's dual role as monetary asset and industrial input makes it uniquely sensitive to trade stress. The global supply chain depends on predictable flows and stable costs. When tariffs fracture that predictability, silver reprices to reflect both the safe haven bid and the industrial supply risk. That's not speculation. That's how the market works. And if history rhymes and silver continues to act as a leading indicator of trade stress, the move that follows could dwarf what we saw today. But I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I just said. Check the data, watch the policy, make decisions based on your own risk tolerance and your own timeline. What I'm giving you here is a framework for understanding how these moves happen, not a prescription for what you should do. If you made it this far, you're thinking critically. That mentality will serve you well. Most people react to price. You're learning to read structure. That's the difference between getting caught off guard and staying ahead. If this helped you see the bigger picture, share it with someone who needs to understand what's actually happening right now. Subscribe if you want more breakdowns like this. And stay sharp out there. Think critically, verify everything, and make decisions that keep you ahead, not reacting late.